Good morning, traders. It's Thursday, January 14th. Taking a look at the charts. Equities trading slightly positive. Small caps up the most, followed by the Dow and then the SP 500. Nasdaq is flat. Continue to see money rotate into more or less the economic stocks, with the stimulus plan supposedly going to be announced tonight. Looks like it's pretty big and juicy. So I think we're going to see this market continue to push higher. But if we look at the charts here, we've had a really nice push the last more or less 2 weeks ago. And that gave us a whole bunch of triggers when this market took off on our ban list. A lot of them jumped up to the 20% gain mark. And now we've been consolidating for the past week, still holding above the 1 week moving average, which is the 5 day moving average. It looks primed and ready for another push, and that could send a lot of sectors really sharply higher again. So we'll see if we get some follow through there. If we take a look over at, let's take a look at the Russell 2000. It's up 0.6% this morning. Big pop, quick pause, another pop. Of course, it's running up this 5 day moving average as well, and primed and ready to keep on kind of moving here until we have some type of event that create some sharper pullback and kind of a reset likely to the 20-day. But at this point, the market still looks really strong and it continues to push higher. Now, if we take a look let's take a look at the bonds real quick. Down again this morning. They had a pretty big reversal really 2 days ago. They had a huge sell-off, ended up closing strong on the day. Yesterday, they closed really positive again. But overall, I think that's an oversold knee-jerk reaction bounce. So any short covering, I think that's what that was. It came right into resistance, this spike low over here, and is starting to move down again today. So bonds could continue to be out of favor for quite some time going forward. And we're seeing metals move down as well. The defensive, safe haven type of plays look still fairly bearish here in terms of their price action. And if we look at what's going on, you can see here we had a big drop, we had a pause, and then the second half of that move, we had a huge drop, we had a pause, had the second half of that move. Here we've had what looks to be a big drop. We're having a pause here, and we could see this go back down and sell off to the downside again. And let's go take a look over at silver real quick. So gold's down 0.8%. Silver's down 1% this morning. Again, same type of price action. It's got a drop. It's got a bear flag forming. We saw the same thing happen over here. And over here, more or less, had just a quick little sidestep. Over here, you can see it a drop, a bear flag. This type of price action looks very similar to this type over here and this type here. This is usually a continuation pattern, and we could see this continue to go lower going forward. Now, it looks like miners are set to open lower again today. Silver miners down 3.5% yesterday, and this morning, if we take a quick look, we can just see where they are. Not that we're in this trade anymore. We closed it out when our break-even stop was hit for the balance of our position. Yesterday, the market closed right near the lows. So it's flat. It's flat this morning. I think gold miners are down slightly a little bit, but again, they're out of favor now. We caught the play. We had the vaccine news. I recapped our SILJ trade in a video, posted it in the members area, so you can kind of get a walkthrough of how it unfolded. It was a pretty rough ride because of the vaccine news that came out right after we got into this play. Again, it had a very nice breakout. It was a leader back at the time, and then the vaccine news took the wind out of the sails. But we ended up hitting our first target and managing our position to turn it into a nice little gainer there going forward. Now, if we take a look over at the band sector, looking at the Hale ETF, it had a beautiful pop yesterday, up to $64, all-time highs. Ended up coming back down and selling down with the stock market yesterday. But overall, it's only down 0.5% yesterday. It was up pretty dramatically, almost 4%, I think, at one point at the open. But we're seeing this probably going to have some type of consolidation. Usually a red bar like this is kind of the sign that the market's going to take a pause for a little bit, form a little bull flag before potentially going higher. Now we have hit all of our targets on here. We got our 7%, we got our 15%, we hit our 20% target, and now we're letting this continue. If it rolls over and triggers our trailing stop, we'll make some more money on that last quarter. If it continues to rip to the upside, our trailing stop is going to get pulled up with it and we'll make quite a bit more. So we just got to let that play continue to mature and play itself out here. If we take a look at what some of the lower end sectors, you can see here SILJ has fallen into a distribution mode. We look at GDX, it's in a bearish mode. It's got a mixed short-term signal. So obviously the metal sector is definitely falling out of favor from a technical standpoint. I know a lot of people are heavy into metals. I like metals. I talk about them all the time, but it doesn't mean we need to hold them and own them when they're not favorable. So we are out of those plays, and we'll be looking to get back into them when they work themselves up the list and get us some type of a new trigger going forward. But right now, we're looking at the top sectors here that are performing well and actually generating triggers and pretty decent returns. You can see here as these leaders here generate new triggers. Every time they create a new trigger, we're seeing anywhere from like 7 to 30% plus gains, and these stocks have repeated triggers over and over where they hit these. So if we were to just pick one, every time we got a green dot here is when a new trigger starts. So this last recent trigger, 24 days ago over here, has generated 33. It did the same thing over here. Again, it had another trigger and would have got in the next day at the open, and it ran 44%, and then it had another one over here. It would have got in at the open. It ran 18, 19%. So every time we get these triggers, we're usually seeing a 7 to like 30, 40% move in a lot of these leaders here. They happen over and over again. And ideally, I updated the Band Trader Hot List course in the members area. You should definitely watch that. Let me just show you here. If you go into the members area, you go to education page, and you can either click this link here, take you down to the course, or just scroll to the bottom. So I've updated this video here. It should play. I'll have to make sure that is going to play. I think there's audio going. Yeah, okay. And then you've got the Band Trader Hot List to kind of make sure you follow these steps. It's going to walk you through all of these different columns this time. It's going to answer a lot of your questions. So it's about the same length as it was before. It's 29 minutes, but it answers almost every question we've had based around Band. Listen to it very carefully as I'm talking. I'm answering a lot of your questions and concerns about how to manage these positions, what it means when you get a trigger and then the trigger disappears after you're in it. All those things are embedded in this course. So make sure you take that going forward here. Now, also, I should mention, every day I've added a page here. We've got the Band Hot List. So you can just go to this Band Hot List anytime. I've got the date here so you'll know when it's updated, and you can just obviously review this at any time. We've got the top 4 US indexes in here, ranked in band order in terms of the strongest to the weakest, and then we've got our hot list down below it for the sectors. So all that's kind of updated. Make sure you watch that hot list course. Overall, these markets continue to rip to the upside, and we're just letting this market work itself out. Let me go back to, if we take a look at the hot list here, what we're looking for is the bottom of this chart. It gives us the major market signals. So when it's red, that's when we do not want to own any Band stocks. That's when the market's trading sideways. It's not favorable. A lot of times the stock market is selling off, but we'll find the Band stocks, the leading stocks, will just trade sideways. But there's no point in putting our money to risk when the market's not favorable, because the market could crash at any point. And if it does crash, we will see even these massive leaders, even the best performing sectors, when the stock market crashes, will crash with it. You can see the best performing sector fell 50% in the time that we had the March crash in 2020. So it's not about just holding them and expecting them to go higher. When the market's not favorable and turns red, we get the heck out. We let the market digest, and when we get a new green, that's when we get our new batch of the top 3 sectors that we catch for the next big run. And then within those runs, if you've got extra capital, you want to be more aggressive. Every time there's a new trigger within the Band list for a top ranking, you can be jumping in and catching these surges. You can trade leveraged ETFs if you want. You can trade options as well. It's up to you. I cover that in the new course as well a little bit. I just touch on it so you can see how that kind of plays out and how you can take advantage of those. Anyways, that's really it for this morning. We're letting the market mature. We're waiting for a next red point here in the stock market, which is going to reset our signals for the next major trend. We get a really strong push up in the assets. And until then, we got the ban hot list kind of giving us these triggers that are happening every week or so to get in and try and catch some of these shorter term trades, get in, get out, and make some money while we wait for a new major market trigger. Anyways, that's it for today. Talk to you in a bit. Bye-bye.